Biggest money mistakes to avoid in your 20s. Hey guys, welcome back to Front Seat Finance. Many people who look back on their 20s can tell you that growing up is riddled with roadblocks and errors. They will also tell you one more thing: these mistakes are avoidable. In today's video, we take a look at the biggest money mistakes to avoid in your 20s. Stay tuned. Never learning to budget. A lot of 20-somethings view budgeting as having enough money to make ends meet. This means not overdrawing their account, nights out, and on-time rent payments. As they grow older, they'll realize that money needs to work hard, beyond happy hours. Where's your hard-earned money going? How are you planning for the future? If you can't answer those questions, then it's time for a reality check. Budgeting will not only help you in answering those questions, it will help you track your needs and wants and recognizing non-essential purchases. Your budget should include your incomes and expenses, where income should be more than expenses. If you have surplus income by the end of the year, a budget can help you invest your income somewhere where it can grow. Failing to set financial goals. Saving creates structures for our finances. It allows us to set and prioritize goals that will impact our short and long-term financial success. Without financial goals, our dreams remain unfunded and out of reach. Financial goals can either be short-term, like saving up an emergency fund or for a laptop, or long-term, like saving for a down payment or a retirement fund. Pick a goal that gets you started in order to turn your dreams into reality. Sort out expenses to put leftover funds toward a goal. You can have multiple goals, and once one goal is reached, keep up the momentum and move on to the next. Stop relying on parents. You need to stop being financially dependent on your parents or anyone else, be it you borrowing money from someone. Remember, money can add tension to a relationship, even one between a parent and their adult child. Now, this doesn't mean having parents willing to help you when you're in financial trouble is a bad thing. In fact, it's crucial to have a support system during hard times. Just don't take advantage of anyone's hospitality or purse strings. If you live with your parents and are saving in order to move out someday, make sure you keep some funds aside for house expenses or to pay the bills and maintenance. This will not only make your parents happy, it will also help you understand the importance of spending, and over time, you'll learn what it takes to run the home. Also, not to mention the satisfaction you can get when you contribute something for the family. Charity begins at home, and so, start from home before you decide to please others like friends or colleagues. Ignoring student loans. This one mistake can possibly ruin your entire life. By ignoring student loans, 20-somethings risk damaging their credit. Reported late payments on student loans negatively impact a credit report. A ding on a credit report leads to a lower credit score, making it more difficult to receive the best interest rates in the future. The easiest way to avoid this is by staying organized. Know the total cost of each loan, the monthly repayment amount, when it's due, and how to submit payment. Are loan payments too costly? Fortunately, most federal student loans are included in the Federal Student Loan Forbearance. There are several other ways to work with the federal government or a private lender before missing a payment. Consider an alternative repayment plan, consolidation, refinancing, or deferment. Just don't ignore it. Create a plan of action to repay student loans. Determine if and for how long your loans qualify for a grace period. Once you start repayment, pay at least the minimum due and make additional payments as your budget allows. Taken on credit card debt. Not all debts are created equal. In fact, maxed out credit cards are one of the worst debts burdens to carry due to interest and fees. There's a reason why credit card companies inundate young people with credit card offers. 20-somethings are easily wooed by promises of low fees, introductory rates, and other perks. Unfortunately, many are ill-equipped for the financial responsibility required to manage credit. Credit card debt is a cycle of high balances and minimum payments. Misuse of credit can tank your credit score and take years to fix. A good rule of thumb is to not use credit card unless you can pay it off in full each month. Already have credit card debt racked up? Create an aggressive plan to pay it off ASAP. Spending more than you earn. Overspending in your 20s and early 30s is a huge problem today. It is easy to spend on luxurious clothes, electronics, and vacations. When your paycheck doesn't cover those non-essentials, it can force you to rely on high-interest options. A core financial literacy lesson is learning how to live within your means. No more spending above what you earn. Basically, income should cover expenses. If it doesn't, then stop overspending and overhaul your budget. Spare yourself from debt by living within your means. Comparison shop, borrow, and limit new purchases. Above all, don't purchase expensive items as a way to fill a void. Learning to be grateful for what you have can stop negative spending habits before they start. Now, it is easy to watch these videos. The hard part is implementing these tips we mentioned. However, once you create a habit and maintain it for a minimum of 30 to 90 days, these habits stay for life. That brings us to the end of the video. Hope you enjoyed it. Thanks for watching.